How to mine Bitcoin. If you are interested in the idea of mining Bitcoin and you are wondering, is this still a thing and can I do it? So you are at the right place. In order to know more, stick to the video till the end. Welcome back, guys. In today's video, we will be going to show you how you can mine Bitcoin, and it's a lot easier than you think. So without any further delay, let's get into the video. What is Bitcoin mining? So basically, Bitcoin mining is the process by which new Bitcoins are entered into circulation, but it also is a critical component of the maintenance and development of the blockchain ledger. It is performed using very sophisticated computers that solve extremely complex computational math problems. Cryptocurrency mining is painstaking, costly, and only sporadically rewarding. Nonetheless, mining has a magnetic appeal for many investors interested in cryptocurrency because of the fact that miners are rewarded for their work with crypto tokens. This may be because entrepreneurial types see mining as pennies from heaven, like California gold prospectors in 1849, and if you are technologically inclined, why not do it? However, before you invest the time and equipment, read this explainer to see whether mining is really for you. We will focus primarily on Bitcoin, the initial cost of the miner. To buy more powerful miners, you're going to have to spend more cash. That shiny new ASIC mining box sitting under your desk may be the most powerful miner known to humankind, but it cost you a lot of money. Before you can make a profit, you have to make back the money that you just spent on the equipment. How to choose a mining pool? There are many different mining pools available. Which one you choose depends on a variety of factors. Should you join the largest pool possible to maximize your chance of a reward? It doesn't work that way. If you join a large pool, your probability of successfully mining a block as part of the pool increases, but the size of the pool means that your payout will be lower. Day-to-day payouts will be more predictable. Conversely, if you are a part of a small pool, then you will successfully mine blocks less frequently. When you do though, your reward will be higher. So you might go some time without earning anything and then get a large reward. Over time, it will all normalize. How to mine Bitcoins? It is like miners are getting paid for their work as auditors. They are doing the work of verifying the legitimacy of Bitcoin transactions. This convention is meant to keep Bitcoin users honest and was conceived by Bitcoin's founder Satoshi Nakamoto. By verifying transactions, miners are helping to prevent the double spending problem. Double spending is a scenario in which a Bitcoin owner illicitly spends the same Bitcoin twice. With physical currency, this isn't an issue. Once you hand someone a $20 bill to buy a bottle of vodka, you no longer have it, so there's no danger you can use that same $20 bill to buy lotto tickets next door. While there is the possibility of counterfeit cash being made, it's not exactly the same as literally spending the same dollar twice. With digital currency, however, as the Investopedia dictionary explains, there is a risk that the holder could make a copy of the digital token and send it to a merchant or another party while retaining the original. Let's say you had one legitimate $20 bill and one counterfeit of that same $20. If you were to try to spend both, the real bill and the fake one, someone that took the trouble of looking at both the bill's serial numbers would see that they were the same number and thus one of them had to be false. What a Bitcoin miner does is analogous to that. They check transactions to make sure that users have not illegitimately tried to spend the same Bitcoin twice. This isn't a perfect analogy. We'll explain that in more detail. Once miners have verified 1 megabyte worth of Bitcoin transactions known as a block, these miners are eligible to be rewarded with a quantity of Bitcoin. More about the Bitcoin reward below as well. The 1 megabyte limit was set by Satoshi Nakamoto and is a matter of controversy, as some miners believe the block size should be increased to accommodate more data, which would effectively mean that the Bitcoin network could process and verify transactions more quickly. Note that verifying 1 megabyte worth of transactions makes a coin miner eligible to earn Bitcoin. Not everyone who verifies transactions will get paid out. 1 megabyte of transactions can theoretically be as small as one transaction, though this is not at all common or several thousand. It depends on how much data the transactions take up. So after all that work of verifying transactions, I might still not get any Bitcoin for it? That's right. To earn Bitcoins, you need to meet two conditions. One is a matter of effort, one is a matter of luck. The first, you have to verify 1 megabyte worth of transactions. That's the easy part. The second, you have to be the first miner to arrive at the right answer, or the closest answer to a numeric problem. This process is also known as proof of work. Main types of mining rigs. Let's talk about some of the most common mining rigs out there. ASIC mining. It stands for the Application-Specific Integrated Circuit. These devices have been built with the sole intention of mining Bitcoin and other cryptocurrencies. This hardware comes in a variety of forms, and some kits are way more expensive than others. They're especially beneficial because of how they deliver exceptional levels of computing power while minimizing electricity costs. Script mining is second type. This approach to mining is especially popular on the Litecoin blockchain. It's designed to serve as an improvement to the SHA-256 hashing algorithm. Through Script, miners need to generate random numbers as quickly as possible and store it in a RAM location. This approach is especially friendly for miners with GPUs, and it can create a level playing field as it lessens the advantage that ASIC miners have. GPU mining appears to be the approach that's most popular among mining farms. Here, graphics cards are used to mine data from the blockchain. Although they are effective, graphics cards can be extremely expensive and can quickly become obsolete as standards change. They're also high maintenance, meaning that cooling and reliable access to electricity are key. CPU mining. This involves mining crypto from your computer. It's a simple and inexpensive approach to take, but unfortunately it's pretty impractical when it comes to mining Bitcoin. This method is best reserved for altcoins, and in some cases, you can find mining software that will run in the background and use spare computing power to mint crypto. Risks of mining. The risks of mining are often that of financial risk and a regulatory one. As mentioned, Bitcoin mining and mining in general is a financial risk. One could go through all the effort of purchasing hundreds or thousands of dollars worth of mining equipment, only to have no return on their investment. That said, this risk can be mitigated by joining mining pools. If you are considered mining and live in an area that is prohibited, you should reconsider. It may also be a good idea to research your country's regulation and overall sentiment towards cryptocurrency before investing in mining equipment. That's all for today's video. What do you think about mining Bitcoin? Is it an easy task? Let us know your thoughts in the comments section below. And while you're here, check out some of our previous videos. Good luck and happy investing!